This is the Leo Clamaco Podcast.
Welcome to the Leo Clamaco Podcast. I'm your host, Leo. Today we have a very, very special guest, Bill Fairman. How are you, Bill?
I'm doing great, Leo. That reminds me, I was very special. I took that little short bus to school every day.
I mean, that should give a lot of people hope if that's true.
No, it is true. Anybody can make it in this world. We're given all the opportunities and tools. It's all about mindset.
100%. I love that. Bill, let's start by you telling a little bit about your background, where you're from, where you grew up, and then eventually we can get into your business and
Sure.
And your book.
Yeah, awesome. So I was born in Philadelphia, Pennsylvania. I am
Eagles
one
fan?
of five siblings, and we moved to a small town in North Carolina before I started the first grade.
Okay.
When I turned 12, we moved to Charlotte, North Carolina, which was the big city in North Carolina.
Yes.
And I went through high school there. I went to college in Atlanta, and then moved, back to Charlotte after
Did
that.
you like all the moving?
Well, it was spread out. My wife is a former Air Force brat, and she had to move every year and a half to 2 years. So I had it pretty easy. So we only moved really twice as a kid. And then, of course, I went away to college. That wasn't a big deal.
Right.
I still had a home to go back to if I needed to.
Where'd you go to school?
I went to Atlanta College. It's no longer there. Right now, it's a mass transit station.
Okay.
I went by to see the old campus, and there's not much of a campus. So I went there to study dental technology, which is
Okay.
kind of odd. I spent the first 10 years of business.
Is that like a dental hygienist or no?
No, you don't work on people. You work
Got it.
on models. So I did what's called crown and bridge work. I did permanent tooth replacement. So the doctor would take all the impressions, and then they would send them to us, and then we would build
Got
the
it.
appliance and then give it back to them, and they would install it.
That makes sense. Got it.
Which is kind of funny. I'm in a mastermind right now that is full of dentists and orthodontists and oral surgeons. So I've kind of
Nostalgic
made that
for you?
full circle. So now I'm teaching them how to invest passively in real estate.
That's amazing.
And it is pretty funny how it turned around like that.
It is. So let's actually go into that. How did you get into real estate? How did you get into investment? Let's go deeper into that.
Sure. Well, the dental technology business was I loved the work. It was engineering and it was art at the same time.
I can see that.
But, I could see the writing on the wall as technology was improving. There was less need for the individual to do the art.
Right.
You could easily do it. Now they do it, most of it in a computer anyway. 3D modeling, 3D printing.
Right, 3D printing.
All that is done through automation now. That said, my wife's dad was in the mortgage business, and he said to me one day, you'd make a great loan officer. And I said, really? Why is that? And he said, well, you have a personality. And I just looked at him funny. I said, don't I need to know something else other than having a good personality? And fortunately, I did have the acumen for the numbers. And it wasn't really about the numbers. It's more about being able to explain the complicated and make it simple for the end user.
Right.
I get up on my soapbox. One of the problems that we have in the public school system is that they don't teach you anything about finance in public school.
They really don't.
That's one of the tools that's necessary to get along in life. It's just basic finance.
For sure.
I mean, the biggest investment in your life is going to be buying your home. You should know something about that before you get out of high school.
Why do you think that it's not taught?
I think it's, and don't accuse me of being a conspiracy theorist here,
Free
but
space.
school, higher education, and lower education is all dedicated to people being worker bees.
Makes
They are
sense.
trying to educate the worker bees to be worker bees.
Right.
They don't want you to be able to make too many decisions on your own. That's why you get a W-2 and you're taxed directly from your paycheck. Because if you had to pay your taxes at the end of every year, there'd be a revolt,
For sure.
right?
For sure.
So they
100%.
take it out little at a time. So they do that in education as well. Um, Wall Street is hoping that you don't know anything about your retirement, because otherwise they're not going to be able to control that retirement for you, control
Right.
those dollars for you, in my opinion. And those people that think outside of the box, that are entrepreneurial, uh, they need to have their own self-directed retirement accounts. Now, you can go to your money manager and ask them, I'd like to self-direct my retirement account. And they'll say, oh, sure, you can do that here. Here's a basket of funds that you can choose which ones you want to invest in. That's not self-directing your retirement account.
No, that's confusing and overwhelming.
Yeah. And it's really funny. Most people, there's only about 10% of the public that knows you can self-direct your own retirement account. And for the first time ever this morning on the way to work, I heard a commercial for a self-directed retirement custodian.
Really?
I've never heard that before.
Wow.
Uh, yeah, it's amazing. At least they're trying to get the word out there. So it's little known that you can direct your own retirement account. You have to do it through a third party. And if you're a little bit smarter, you can do what they call a checkbook, where you have the authority, but there's a lot of IRS stuff involved, and you're better off with a custodian, because there's a lot of rules, and you want to make sure you stay within the rules, because they can blow up your account. And essentially, they're not taking it from you, but it would be the same thing as if you took all your money out of your 401k. You get charged an early penalty for taking
Right.
it out. You have to pay all the taxes up front, that type of thing.
Got you.
But most people want to invest in stuff they understand. And most people that have a mortgage understand real estate. And it's easier to invest in things that you know, in
For
my
sure.
opinion.
100%.
Sorry, I didn't
I
mean to
think
get off
you
on
should
that.
only invest in things that you know.
Oh, yeah. Yeah.
You know?
I didn't mean to get off on that soapbox.
No. Please. This is your time. Speak your mind, Bill. Speak your mind.
So anyway, my father-in-law talked me into getting into the mortgage business. Again, I saw the writing on the wall. Fortunately, I had the ability to understand the numbers and then explain them to the end user.
Are you a
Eventually, the
numbers guy?
company. I'm sorry.
Are you a numbers guy?
Not really. I enjoy solving problems.
Got it.
When I was in the dental business, that's what I was doing. I was solving problems. People had a problem with missing teeth. I solved that problem for them. So it was a pretty easy transition for me. The difference was I'm solving problems with the numbers.
Right.
Eventually, that company that I worked for, which was his, we ended up getting into what's called the wholesale business. So instead of working directly with borrowers, I worked directly with other mortgage companies.
So
And
I've actually done a little wholesaling.
okay,
I
nice.
flipped 5 homes,
Well,
lost more money than I made, and pulled out.
well, we like to call that earning while you learn, but you
Yes,
weren't earning, you were just learning.
correct. And I didn't like it.
Well, the wholesale side of the mortgage business is different from the real estate business,
Got it.
but it's similar. So in the mortgage business, he who has the biggest line of credit is the one who actually is doing the wholesaling. So if you had mortgage brokers, they always had a variety of different mortgage programs to offer the retail borrower.
Right. That makes
There's
sense.
different larger mortgage companies that would have their program with their lines of credit. But in the end, all of it was sold to Wall Street and as a mortgage-backed security. And as you may be familiar, from 2008, all that came crashing down.
Oh, yes.
At one time. I had been in the business that time about 20 years.
Wow.
When that happened. So I found myself like many others.
Was it a shock for you? What happened?
It was quite a shock.
Yeah.
But I was in the commercial side at the time that it happened, which was good. It took a long time for me to end up losing my job. The downside was by the time I lost mine, all the other good mortgage jobs were gone.
That makes sense.
So 20 years in the mortgage business, the industry that I'm in collapsed and was only about 25% the size that it was when we started.
That's crazy.
So
that's good and bad, right? Depending how you look at it.
Well, it was bad for me. I had just turned 50 years old. I was middle management in sales in an industry that was basically non-existent.
Right.
I was overqualified for any mortgage position that was out there. I could not find a job. It took me 3 years to find a job.
Wow.
I ended up, and this was very embarrassing, but at 50 years old, I had to go to my parents to borrow money to get my truck driver's license.
Wow.
And I got a job as a long haul truck driver because there's a truck driver shortage. There has been since then. And they didn't care how old you were or how over or underqualified you were. They just wanted warm butts in the seats.
Right.
And
can you drive? It's really all they care about.
And it was, don't get me wrong, it's a noble profession. It's a
For
job
sure.
that needs to be done, but it's a very difficult life. You're always away from your family. And it's a dangerous job too. There's so many idiots on the road. You can easily fall asleep while you're doing this. The transportation industry is a lot different from any other industry. You don't get overtime. You have, at the time, you had 11 hours you could be on duty.
Wow.
Before you had to take a break. So no wonder people were falling asleep out there on the road. That said, it gave me plenty of time to kind of think about how I got to where I was. You see, I lost my 401k. I didn't want to cash it in because they tell you not to do that.
Right.
Right. But eventually I ended up having to cash it in because I was going to lose everything anyway.
Right. So
And
you might as well get the money.
By then it was only worth half of what it was when it started because the market had crashed.
Wow.
So my thought this whole time, and towards the end of my truck driving career, I had what was called a dedicated route, meaning I knew exactly where I was going, and I did the same thing every week. So I left Charlotte on Thursday early afternoon, and I would return late Sunday night or early Monday morning, and I'd have a few days off. But I would sit for 3 days in a truck stop from Friday to Sunday evenings waiting for freight from Air France to be delivered at Dulles Airport. And then I'd pick that up. I'm sorry?
How humbling was this for you?
Oh, yeah, it was very humbling. Again, I'm doing this because I needed to pay the bills. I needed to feed my family.
For sure.
I needed to keep our house. So I'm willing to do anything that it took. But I had plenty of time to sit in that truck and think about if I would have been a passive real estate investor, I would have never had to touch my 401k. I would have never been forced to drive a truck. See, I was in the real estate business. I was in the real estate finance business. Right. But I was a worker bee. I was not an investor. And that's where I got my passion for teaching people how to invest passively so the same thing wouldn't happen to them. And even if there isn't some sort of a black swan moment, you can take this passive income, gain more freedom with it. And you see, and I'm sorry, I'm getting back on my soapbox again. Our retirement system is very flawed. It teaches you to accumulate a certain amount of money.
Right.
And then when you retire, you start drawing off of it. Hopefully you're making some too, but you're drawing off most of it. You're not making as much.
Right.
And then you have to hope that
there's
you
enough
die.
Money for you to pull from, right?
Yeah, you're hoping that you die before you run out of money.
Basically.
So that's not a great system. The good system is that you're living off of that principle, you're making more money than you're taking out. And now you have a legacy that you can leave behind to either your kids or your community. That's the way retirement should be. That's the way passive investing should be. And the reason I choose real estate is, number one, I've been in it most of my life. I understand it. But if you also look at the history, all the people that have been wealthy and remain wealthy have most of their money in real estate. Real estate, there's only so much of it.
Right.
I like to say that there's only so much land, and the land that God is creating won't be habitable for quite some time. So as those volcanoes are making new land, it's going to be a while before you can grow anything on them.
Right. And location also, right?
Yeah.
There's only one Miami. There's only one New York. There's only one LA.
Well, we can take single family homes as an example. You know, our market right now is a little upside down. Interest rates have jumped 5% in the last year.
It's insane.
So it's very expensive to own a home. Why, if that's the case, why is there still no inventory available for people to buy houses? Now, real estate is hyper local, okay? So there's going to be areas where people are moving from where there's plenty of inventory. But for the most part, where you want to live, there's not enough inventory. We are currently 6 million homes behind household formation.
Wow.
So since 2008, we lost a tremendous amount of construction workers in 2008. A lot of these people went into other, lines of work. And the builders haven't kept up with it since then. We're always behind and have been behind.
Wow.
With this large rate increase, it's also hurt our existing home inventory because the people that have the 2 and 3% mortgage rates don't want to sell their homes because now they have to pay much more to get another home.
Right. It makes no sense.
And unless they're changing jobs and they have to go somewhere else, they're just not going to sell their house.
No,
and
that makes no
even
sense.
if they do, why wouldn't they just rent the house out that they have for the really low payment that they have and then rent somewhere else until things change? So we have a supply and demand issue. So single family homes, you're hoping that because the payments are so much higher that the prices would come down so more people can afford them, but that's not going to happen because there's a shortage.
That's crazy.
So we're in kind of a stagnant market, but it's still the space in real estate where you want to be because people always need a place to live. In any economy, you need food and you need shelter.
For sure.
If you're in the shelter business, you're in good shape.
Wow. That's really cool. Let's talk about your book,
Okay.
Drive to Success, because I want to tie in your book with what you do. So, because I've seen bits and pieces of it,
Sure.
and I know how powerful your story is and how it really connects to everything that you do. So I want you to share that with us.
Well, the book is called The Drive to Success. It is not just me. It's a compilation of 10 other entrepreneurs and their story about how they failed forward. And I go into my story. It starts in 2008, where I had the best job of my life. And then next thing I know, it's all gone through no fault of my own.
Right.
And the type of mindset that you have to get out of this and to start something else.
And to keep pushing through.
Yeah, you have to have the mindset of this did not happen to me, it happened for me.
Right.
Failure is not a failure unless you let it become a failure. Failure is always a learning experience.
For sure.
It's funny. I have this personal trainer that tells me that I have to do exercises until failure. And I have to keep reminding him it's not failure, it's fatigue. Because if I fail, I'm probably not going to try the next set.
Right. That mindset shifts.
Yeah. So you have to constantly keep in mind that these failures, and everybody in business has failed. If they
For
haven't
sure.
failed, they're not doing enough, or they're not doing it right. And
100%.
eventually they will fail. I have
I
a
don't
friend of
think
mine.
you can be successful if you don't fail.
No, failing is learning. And
Yeah, 100%.
there's more to business than just doing one thing. Things change. Listen, even if you do everything perfectly, markets can change. Black swan events, pandemics. There's all kind of things that can go wrong.
For
All,
sure.
all you can do is minimize your mistakes and learn from your mistakes, and
And
make
improve.
sure that you can be the best you can be during those downturns, so you can survive that. It's funny, a friend of mine wrote a book on hiring millennials. He's a baby boomer, I'm a baby boomer, and he wrote this book on.
Millennial here.
So he said the difference between baby boomers and millennials is that baby boomers, it was bad to fail. You're always taught you can't fail.
Right.
You're a loser if you fail. Well, millennials were the first ones that grew up with video games. How do you learn in video games? You don't
Wow.
have
What a
instructions.
great concept.
Yeah,
Yeah.
you get in there and you fail, and then you learn from that failure, and then you don't do that again.
Right.
So the millennials don't have a fear of failure for the most part. They go forward, and that helps train them to not do that again the next time, to be
Wow,
better
that's
the next
so
time.
cool. I love that analogy.
Yeah, it's awesome. And it's
That's
true.
It is. Yeah, that makes total sense.
And so baby boomers can learn from that. They shouldn't have a fear of failure.
Go play some
That's
video games, baby boomers.
that's right. It's all about learning from those mistakes. So even though the lending business that I was in previously pretty much went belly up, as you can see, from about 2012, 13 up till recently, that's been a booming business, making mortgages. Well, guess what's happening? There's a bunch of loan officers out of work right now. And it's not because that business failed. It's because there's not as many loan refinances and stuff because interest rates are so high. There's
Sense.
not as many homes available. Yeah, and there's not as many homes available for sale either. So there's fewer loans being written. But we were in the right spot after a while. My sister, who was my business partner, Wendy Sweet, I got her into the mortgage business before the crash. I drove a truck, and she went to seminary school. When she got out of school, she still maintained her real estate broker's license, and a fellow that she was working with before the crash was buying FHA foreclosures on their website, and he needed a real estate agent to buy these properties for him. So she went to work for him till she found a church to go to work in.
Okay.
But she was also doing private loans on the side. But the private loan business got so big because they were buying so many FHA foreclosures that she asked me to come help her, and then we started this business. So my sister, her degree was in nonprofits, and we like to kid her that she flunked because she keeps making a profit. So that's how we started our business. We knew people that had self-directed retirement accounts that had money in it, but they had no place to invest it. And we knew people that were trying to get loans to do fix and flips on homes and couldn't get bank loans.
Got it.
So
you
we
married
brokered the two together, and we made a commission on those. And then eventually it grew to the size where we had to start a real estate investment fund, a Regulation D fund, which was actually much better for everybody involved, especially the self-directed retirement account holder. Because when you're lending money on a single asset and that asset goes south for whatever reason, it doesn't mean they're going to lose money.
Right.
But they're certainly not making any money until we figure out the disposition of the property. And it's not making any money while we're waiting.
Right.
Inside of a fund model, and this is where I love the passive return part of it. Inside of a fund model, you're diversified over all the loans in the portfolio. So if one loan has trouble, you're still making money on all the other loans. And the way the fund model is set up, there's also what's called a loan loss reserve set aside. So when one does have a loss, the loan loss reserves pick up that slack, and the investor never really sees it.
Wow. So basically, you have backups for everything.
Yes. Well, I mean, listen, there's always a chance in any investment that there's going to be a loss. But
For sure.
because I've had this banking mentality for years and years, I'm always looking on the conservative side. I'm always looking at plan A, B, and C. I would much rather have 5 $100,000 loans than one $500,000 loan, just like I'd rather have 10 rental properties than one, because if you have the one that goes bad, it hurts you. If you have the 5 or the 10, you still have others paying the bills. We always say you want to have 10 rental properties. You just don't want your first one to go belly up, because then you'll never have the other 9, because you'll get discouraged and walk away.
That's true.
But inside of our particular fund structure, we also allow people to compound their returns. So instead of just getting a distribution at the end of every quarter, which would just be, a payment in the bank,
right?
They would take that distribution and then they would buy new shares with it. And now the next quarter, the new yield that they're getting is based on the new higher balance. And I think it was
constantly reinvesting.
Right. And I think it was Albert Einstein that said that compounding interest is the 8th wonder of the world. Those who understand it receive it. Those who don't pay it.
Facts.
That's right. So this way, the reason I like the banking side of things too in the real estate space is because when you invest in a property, you're the full 100% owner. You're taking all the risk. You're responsible for the taxes, the insurance, the maintenance, tenants, toilets, and trash. When you're on the lending side, you're only making a loan for 60 to 70% of the value.
Got it. So
you get to control the asset without having the responsibility of owning the asset. If somebody slips and falls on your property, you're the one getting sued, not the bank.
That makes sense.
Yeah. So the bank is always in the best position. Now, there's some downside to that too. If you don't own the property, there's not any write-offs that you get that the government gives you from owning property.
It's an investment.
Yeah.
They see it as an asset, right?
Well, again, the asset is the loan itself, not the property. The property is just the collateral that's being held up.
Got it.
So if you're in a self-directed IRA, it's the perfect investment vehicle for that type of a fund, because there's no tax benefits, but your IRA already has the tax benefit because it's either deferred taxes or it's tax exempt if it's a Roth. So that's the perfect vehicle for that. I like to tell people, if you have cash, you want to buy property with cash, you want to lend on property with your self-directed accounts.
If somebody wanted to invest with your firm, what's the minimum?
Okay, well, first of all, I need to do my disclaimer. This is not a offer to sell or buy any securities. Always consult your financial advisor. You must read the PPMs before you make any investment decisions, and your mileage may vary. That said,
this is for entertainment purposes only.
That's right. Comparative purposes. So our minimum investment is $100,000, but if you have a couple of different accounts that you want to combine into one, then we'll allow you to go as low as 50 in one account that you're bringing in to match with some other money.
Gotcha.
Because a lot of times when somebody's in the self-directed mode and they know about it, you can self-direct a college fund. You can self-direct your health insurance fund. You can self-direct, like I said, a Roth or a traditional, or you can have a solo 401k as well. So there's a lot of different accounts you can have that's self-directed. So sometimes you have different pots of money that need to be
Right.
invested all at once.
I guarantee you a lot of people don't know about that.
Yeah, no, it's I'm telling you, they push you to the 401k. And this is anecdotal only. Okay?
Mm,
But everyone that I've ever talked to that had a 401k, at the end, when it's time for them to start taking money out, they look at that account, and really the only money that they've actually made was the money that they put in and the money that their employer put in.
the match.
The stock market never really gave them any extra money. It just maintained it.
Got it.
Because there's so many things that happen at the wrong times. It always happens at the wrong times. It's a Murphy's Law thing. When you're getting ready to retire, that's when the market goes down and your retirement savings drops quite a bit. When you have a commercial mortgage that, and I don't know if you know this or your audience knows this, but when you get a regular commercial mortgage on an apartment building or office building or a shopping center, those loans are set up to be 3, 5, 7-year balloon notes.
Okay.
They'll give you a 20-year or 25-year term, but you have to refinance them after 3, 5, or 7 years, depending on the program.
Got it.
So Murphy's Law says that when it's time for you to refinance, that's when all the rates are going to be up, and that's when the economy is going to be down, and you're going to end up having to bring money to the table.
Oh boy. Why would anybody do a loan like that?
Because that's the only way you can get them done. They don't offer anything else.
Got it.
There are some fringe companies that do that, but their interest rates tend to be 2-3% higher than the going rate. And when you own a commercial property, you own a commercial property for the income that it earns. And the higher the payment, the less income you're earning, because now you have that debt service that's covering it. But
That makes sense.
the 30-year fixed rate mortgage is still the best deal for the borrower ever, even at now where it's at 7% or more. Because 10 years from
7%?
now,
It's crazy.
yeah, it's over 7%. But if you think about it, what do you think the dollar is going to be worth 10 years from now?
That's a great question. I have no idea.
Well, do you think it's going to be worth more or
No,
less?
Less for
It's
sure.
going to buy less 10 years from now than it does today.
100%. It's going to buy less a month from now.
But 10 years from now, when you're making your mortgage payments, you're doing it on today's dollars.
Right.
And 20 years down the road, you're doing it on today's dollars. So you have an asset that you're paying, and you're knocking down the principal, yet the value continues to go up, and you're paying for it with yesterday's dollars. And so what's the worst thing that can happen is that you're stuck with the rate you have now. What's the
Right.
best thing that can happen? Rates come down, you can refinance it at a lower payment.
Got it. That makes sense.
So here's my one big piece of advice. Never get an adjustable rate mortgage. Never, ever.
You hear that, guys? Never, ever.
Because it hurts you when they go up. It helps you when they go down. But you can be in the fixed, and it doesn't hurt you when it stays the same. It only helps you when it goes up. So you're
Right.
protecting your flank, as it were.
Let me ask you a question.
Sure.
How is it working with your sister? Because I know my sister and I would never be able to work together. So how does that work with you too?
I am the oldest of 5 siblings.
Wow.
4 of the 5 are all entrepreneurs.
Look at
And
that.
we have a very close-knit family. We get along fine. Listen, it's an advantage having a sibling working with you because you can get off your chest what you need to at the time,
Right.
and there's no hurt
There's a
feelings.
deeper level of trust.
Yeah, we just say what we need to say and we move on. We're not holding any kind of a grudge. There's nothing underneath the surface. You know what I mean?
I do.
Whereas if it's not family, stuff may tend to simmer underneath the surface. You never even know it. And listen, I couldn't work with my wife.
It's funny because I actually work with my wife.
Um, yeah, it's a different story, I think, with spouses. I mean, it's okay. You work with your wife, and that works out well.
It does, thank God.
Uh, we work. My sister and I work well together because there's a yin and a yang there. She's more of the
Got
jump
it.
in with both feet. I'm more of the I need more information before I make the decision, and so we offset each other pretty well.
That's really cool.
Yeah, and we know how each other operates. So, like I said, it's not a
Right.
we understand that.
Is she the second oldest?
She is the third. I have a brother. He and I are the same age for a week.
Got it. Wow.
Yeah, so pretty close together. Yeah.
Yeah, yeah.
And then my youngest is 9 years younger than I am.
Very cool. Changing flows.
Sure.
What advice would you give to someone that is currently looking to buy a home but can't find it? They're frustrated. They don't know what to do. What advice would you give them?
Right now, don't buy something for the sake of buying something. Real estate works in cycles. Just be patient. I know it's hard sometimes because you want to get that investment going, or you want to get into a place where they can't tell you how to do everything.
Right.
Florida, and you're in South Florida, right?
I am.
Yeah, that's a different market. Like I said, markets are hyper focused. If you're in the Midwest or you're out, even out in, let's say, San Diego and San Francisco and those areas, those values are decreasing right now, but they were way overvalued to begin with.
Right. That makes sense.
So those are areas where you can get some really good deals. But if you're waiting, you're frustrated, you're having a hard time buying homes because the market is really overheated. And like I said, there's a shortage. There's a reason for this.
Right.
Just be patient. Sometimes you may have to be willing to buy a property that's not move-in ready, that you have to fix up.
Invest
And you
some
have
money.
to be willing to do that. Now, the problem there is most banks won't lend on properties that aren't ready to be occupied.
Mm.
So
You got to
it's
put
hard to get that
your own
mortgage
capital.
structure. Now, there
Right.
are a couple of mortgage structures, and one of them is an FHA loan that will allow you to buy it, rehab it / fix it up all in the same loan.
Wow.
So that's something to ask about. So if you do find a property that's distressed and looks like terrible, you look at HGTV, and what really makes me laugh is that the couple will walk through the house and it'll be, oh, I don't like that color. Well, you can always paint, right?
Right.
They don't have that vision of what it could look like or what it needs. The last thing you want to do is buy a house that doesn't fit your needs or that can't fit your needs in the future just to get into a place. So just be patient, find the right spot, because a home that you are wanting to live in has to be one that you want as a home to live in. Yes, it's an investment, but you're not buying it for investment purposes. So don't think of it that way.
Right.
If you're not happy living there, eventually you'll want out and you'll hate the place and you'll end up making a bad decision getting out of it. How's that? I know I'm not answering it well.
That was fantastic. That was
but other than just be patient.
That's great advice. Sometimes doing nothing is the best decision.
Sure. Listen, I do that. Part of what we do in the lending business is not making a deal is the best thing you can do. It's better to make no deal at all than to make a bad deal.
Right. Because then you're stuck with a bad deal.
Right. And a lot of people measure ROI. I also measure ROE, which is return on effort.
Return on effort. I never heard that one before. That's a good one.
Yeah, that's a Billism.
I'm writing that one down. R-I-E.
So you have to look at that too, because your time is valuable. And if you have two deals that are basically the same, one of them is totally passive and the other one you have to do a lot of work on, which one are you going to go to?
Right.
Yeah.
Clearly.
So if it's going to involve a lot, then I'll pass.
That makes sense.
Yeah.
That makes sense. Bill, is there anything that you would like to share with our audience? Where can we get your book? Where can we find you? Your Instagram, your Twitter, your
Oh,
website?
Thank you for that setup. You can get all that on my personal site, Bill, the letter F, as in Foxtrot, 360.com. Bill, the
I'll make
letter
sure to
F,
put a link down below.
360.com. It's got all my social media, all my contact information. I have 2 free gifts for your audience. One is an ebook on the differences in mortgage pool funds and other types of funds.
That's awesome.
I also have a PDF, which is 10 questions that you should ask a debt fund manager before you ever invest in a debt fund. And not just the questions, but why the questions are important. And all of that is under the gifts, free gifts tab in BillF360.com. And if you're wondering about the book, a big old pop-up will come up when you log on that says, here's the book. Click here.
Fantastic. I'll make sure to add all those links down below. That is fantastic, Bill.
Awesome.
I really want to thank you for coming on the show and sharing your journey, your struggle, your success, your passion with us. I really appreciate it.
Thank you, Leo. It was a pleasure being on, and I really appreciate you asking me to be on the show because I love sharing the passive income journey. Everybody should know that for retirement coming up. Doesn't have to be with me. It can be with anybody, but you need to get some sort of passive income in your life. It will make it so much easier.
It really will. And it's something very, very important. I agree with you.
Yep.
Today's retirements are not really what they're made out to be.
Right. Exactly.
Thank you, Bill. I really appreciate you.
You as well. Thanks.
Thank you. And man, what'd you guys think? Was that a great episode? Thank you so much, Bill, for being a part of the show. That was the Leo Climaco podcast. We'll see you guys next time.